Good morning, this is Robin Bieber on the Crude Spread Talk on the 8th of May at 8:30 in the morning London time. And the chart in front of us is June-July WTI. You can see yesterday it hit its target to 110, the 100-day moving average. It now needs to move and close over there to have some serious further upside, probably to this gap here, which we'll just put a line on it to show where it is. And that comes over in at around plus 29 area. And that needs to be filled, but it isn't going to be filled unless we can get over the 100-day moving average. So we need to be over 110 to give us a chance of pushing over into positive territory. Meanwhile, the 5-day moving average is holding at around minus 170, and dips to that would probably uncover some buying. Now, if we look at the 60-minute chart, this one here, we can see that it's actually looking quite positive. It should deliver some further strength this morning. Now, moving on to July-August. July-August is not quite so impressive. It's got holding the 5-day moving average at minus 162. This must hold or it dips lower to the 8-day around 195. And it has no further targets higher unless it can get over this 50% correction point at minus 146 and preferably over the 55-day at minus 130. Then it would have a free run at something like the correction point at 93. And the 60-minute chart is suggesting some upside here. The stochastic is nice, but I'm not convinced it's going to take us above, say, for example, the 50% correction point. It should take us up to it. Now, looking at some back-end spreads, the DEC June, fine. It's above the 5-day moving average at minus 261. It must not close below there. It's above the 34-day at minus 247, suggesting some more strength up to around 220 level. The 60-minute chart is non-committal and suggests that we could be a little bit erratic this morning and going into the afternoon. And the DEC Red DEC on TI needs to get over the 34-day here at minus 404 to give it a fighting chance to retest the 55-day at minus 344. It may well do that, but it's got to get over this 404 level, which is printing at the moment. And this 55-day is pretty fierce resistance, so be careful. And look how it failed 2 days ago. Meanwhile, it must not move below minus 416, the 5-day, otherwise it's likely to slide a bit to test the 462 level around about the 8-day moving average. And again, the 60-minute chart not giving us too many clues at the moment. Now, moving on to Brent structure. And here's the July-August. It hit its target at minus 66 yesterday. Didn't punch through, and now the area minus 66 to minus 60 is riddled with resistance, the key correction point and the 100-day. So only a move now over minus 60 would give it some upside. It must not, in the meantime, close below minus 104, the 5-day moving average, or minus 111. This area here is support, and it's good support, which has held the 5 all the way up. But if it were to close below minus 111, we'd be in for more of a test of lower numbers, certainly down to around the 130 level, the 8-day moving average. And the 60-minute chart on this contract is suggesting some upside this morning. Here, it's just punched higher, and there's a reasonable chance of some as I say, a little bit of upside during the course of the morning. Now, if we move on to AUG-SEP, it's hit its target at the 50% correction point at minus 81. Needs a move and close over here to give it a further target to around the minus 45 level, the 100-day moving average and CP. It must not move back below the 5-day at minus 95, or it'll stagger and falter and slide about 20 cents to the 8-day around minus 115. So there's a little bit of upside developing, and the 60-minute chart on the AUG-SEP is certainly suggesting upside here. It's got a nice little positive stochastic, so we should be in for a little bit of firmness during the course of the London morning. Now, moving on to some back-end stuff for Brent. The DEC June needs to hold the 5-day at minus 256. It's printing minus 254, and it's got the 34-day at minus 261. So say minus 261 must hold, or it's dipping to the 8-day at around 289. So it's quite important that it holds this area. And then it can retest the area of its target, the 222, which is the 55-day moving average. If we look to the left, we can see the 60-minute chart is suggesting some upside this morning, and that the 5 and 34-day moving average should hold, and we should push higher. The DEC Red DEC, again, rather similar to the DEC June, found trouble around the 55-day moving average. It's almost in the same technical condition as the DEC June. It needs to hold the 5 and the 34-day moving averages at 433 to 439. As long as it does so, it should have another pop at the 55-day at 375. No real targets higher unless it gets over the 55-day. And the 60-minute chart, a little bit illiquid, but suggesting some upside during the course of the morning. That's all for today. Good luck, good trading, and bon appetit.